Hello, fellow traders. 'Tis I, TheRumpledOne, coming to you on Friday, August the 5th, the year's 2022. Let's talk trading. Weekly wrap-up, NFP Day with Walmal. These videos are for educational purposes only. Your results may differ from mine and from Walmal's. Walmal, you're usually not around for the weekly wrap-up, but I was thinking maybe you could talk to the traders about the NFP Day and what you do during NFP.
What do I do during NFP? I take my hands, I sit on them, I bound them in rope, and I do nothing, and I wait for all the fallout to occur. And then you can make some money. At least for me. The problem for me is that I'm a more conservative type of trader, and I just don't like going and trying to predict which way it's going to go and how far it's going to go and what it's going to do. And, I'd rather go and wait and see what it does and then make money off of what it does after I've seen it. Maybe I should have been from the state of Missouri, the show me state.
Right.
I don't know. Because like today, who would have thought the numbers that came out today, who would have thought those numbers would have come out? For those who are listening who don't know, they were expecting 250,000 jobs, on NFP, and they got 528,000. So it's more. The miss is more than 100% miss. That's a huge miss, and it was a huge miss in favor of the dollar. So, who would have thought that would have happened? And even unemployment rate has gone down, and the hourly payroll has gone up. Well, we knew the hourly payroll had gone up, but the other things, but the thing is, they still, both those numbers blew even what the forecast was. So, what is that going to do when you blow numbers that badly? In a very, very highly respected or highly looked at is probably a better word. A highly looked at report, it's going to move the market, and it did. Where you think about it, before the numbers came out, the range for the day was only like 44, 45 pips. That's all it was, and now we got a range for the day of 138 pips. So it's moved the market, from where it was, probably down well over 100 pips. Had to have been well over 100 pips because we had moved towards the middle a little bit prior to the report. And so, that you have to be really careful about these things. You're sitting there, let's say you're a one-lot trader where you're allowed to, and you allow yourself a 10-pip loss. Well, you just took a loss of, if it went against you, you just took a loss of 10 times, what you were willing to go and do if you didn't have a stop loss in place. And more importantly is that on that big blowout down, there was like let me count it right now, 1, 2, 3, 4, 5, 6, 7, so it's 70 pips. So basically in the course of maybe 2 or 3 minutes, it dropped down, not even 2 or 3 minutes, I'm sorry, in the course of 2 or 3 ticks, it dropped down 70 pips. You're not going to get, your stop loss is not going to get filled. It's not going to get filled at 10, that's for sure. Maybe it'll get stopped, where you took a loss of 30 or 40. Well, that could have a huge impact on your account. And so you need to be really careful about that. Back in the old days, going back to 2007, 2009, you could go and do nice little things and put straddle trades on, and where you basically on NFP, what you would do is you'd take a long and a short at the same time, and once you saw the direction of what you thought the direction was, you release the trade in that previous direction. And but the thing is, you can't really do that anymore because these brokers, they increase the spread so much, that it just doesn't make it worthwhile or very difficult to make money. I know, Tiro, that your spread had gone really crazy. How far did that get off the mark?
Oh, I think it was something like a 17 to 20 pip spread. It was ridiculous.
So you're paying the 17, and if you're trading both ways, you got to take that 17 and multiply it by 2. So that's 34 pips. So that's half the movement okay, that you would have gotten, and then on top of that, you would have taken a huge loss on the other one side by the time you would have gotten out. So you would have lost money on it. So the old days don't exist anymore. We can lament about that, I guess, and look at the good old days where you can make money off of that, but it doesn't exist anymore. So what are you going to do? What you do is you say, okay, we have huge moves. We can still make money off of this. And so what do? You wait until maybe the markets settle down. I usually wait somewhere between 2 to 5 minutes, or 15 minutes sometimes even, and just wait for it all to settle out. And because once it settles out, the market's going to continue moving either in the direction that the news caused, or it's going to go and try to go and retrace a little bit. This was an overreaction. Well, today with the news that it came out, this wasn't an overreaction. I'm surprised it didn't move more than that. So the smart money, I would say, is okay. Yeah, it's going to go and oscillate for a little bit, and then eventually it's going to settle out and then continue to drop. And if you look at the 1 minute, it becomes really evident that you see the oscillation. You can even see it on the 5 minute chart as well. That's exactly what it did. So for about 15 minutes. It just sat there and went back and forth. And the back and forth were across a range of, probably 10 to 15 pips. So you could have made money during that time. And that's one thing you could do is just sit there and just, once you recognize the pattern of it going back and forth, just keep on taking your trades. And, you call me a Yale student, I'll take them in both directions, but eventually you wind up losing one trade, and you got to know that you're going to lose one trade because it's eventually going to make it a directional change, and you just go and lose that one trade. But if you make 3, 4 trades that are profitable, you should be to the good.
Right. So I brought up the weekly chart. All the gaps filled. You can see the pound, it just bounced down to 25, the psychological 2025. And now it's just moved 8 pips off of that low. We broke out of the opening range for the week at, looks like 2136. That was a number to watch, so to take that trade. And also during NFP, a lot of times you can just use the previous day's high and low for triggers, and that would have short triggered you around, what was yesterday's low, 2065. That was a nice trade to take. We're 1,488 pips below the yearly open at the moment. We had an inside bar 3 days ago, taking that short at 2157. That would have paid off nicely. And also the weekly inside bar was at 2160. So 2160. So there was another indication to be short. 144 pips range so far today. It's interesting. I only see 2, 4, 6, 8 pairs over 100 pips in range on NFP day. And let's see. They're mostly dollar pairs and yen pairs that have moved. The buy zone, there was the short zone between 2147 and 2145 right before NFP came out. That would have been huge. And we just missed top of the hour by 2 minutes. You can see prices coming back up. Huge return bar on H1. And since it is NFP day and the opening day for the week, or either opening week for the month, anything can happen here. To see a retrace probably won't happen, but anything could happen. The Bambino flex indicator indicated along and also near the pivot point. But what was interesting, the previous hour opened right at the pivot point, and you see it went up about 8 pips, and then coming back down at the pivot, the rest is history. We've broken below S1 on the pivot chart there, and we also broke below the a yearly low here, 2065. Oh, I'm sorry, that's yesterday's low, not yearly low. Missed pivot, we took out the daily pivot, we took out the weekly pivot, and we've taken out the monthly pivot. And the monthly pivot was sitting at, let's see, what's the chart say? Can I get a reading? 2060 was the monthly pivot, so we took that out. We're out of the lower wick zone. That was so wick zone traders were rewarded. And the ranges for the week, we only have 268, which puts us at the 33 percentile over the last 12 weeks. So we're less than last week, but more than the previous week. High minus previous high on the week, 48 pips. Low minus previous lows, minus 65. So we didn't break out the previous low of last week. High minus close for rat zones. Traders, red rats 258 and green rats 10 at the moment. We just put in that weekly low. And on the Walmal chart here, you can see we had a long trigger at 30 this hour. So far, good for about 7 or 8 pips. 13 pip range this hour. You can see everybody was waiting for the news, because over the past, looking at the last 10 hours, including this hour, you can see we only have one hour over 25 pips, not including the previous hour. Okay, we're heading back into the launch pad at 40. Let's see what happens there. We had a lower high trigger on M1 at 2031. That's good for about 5 pips right now. And looking at the monthly ranges, so far this month, 248. And for the year to date, accumulated by month, we are still at 1989 because we haven't broken out of anything. Okay, we can look at the close minus open for the months, and so we can see we have a red month again here so far in August. July was green on my broker by 2 pips. That can vary by broker. Okay, so far this month we're still below the EMA 5 or indicator 2. We're 128 pips below the monthly open. Price is in the lower wick zone of the previous month and the month before that. And if you look left, we're just in wick zone territory here. For the week, we're about 36, 37 pips below indicator 2. If we switch this to the weekly chart, you can see we're in the body of the previous week. And we just put in a 2 ball on M1, so it's struggling there at the launch pad. So Walmal, we got a little over a minute left. You say you sit on your hands, but after you wait, do you resume normal trading, or do you? Is there anything you might do slightly different because it's NFP? Anywhere from getting out quicker or riding longer?
Yeah, what I do is, for the most part, I watch the market very, very closely. Just because the thing is, price sometimes it returns back to moving normally, and sometimes it doesn't. You know, it's sort of like right now. While you were going through all the statistics and everything, I took a long trade. And I picked up like 3 or 4 pips. But as soon as I got 3 or 4 pips on it, I got out, because what I'm seeing is it's struggling, you know, at that 40 line. It's going up and down, hitting it, bouncing off of it, hitting it, bouncing off of it. So I said, get out, you know, it's just not worth it. And I'm glad I did, because I would have lost everything, you know, that I had gained on paper. So that's generally what I'll do. I'll just go and just be a little bit more cautionary, I guess is the best way to put it. In other words, you know, sometimes when you take a trade, you know, take trades and it's normal things and everything seems to be moving normally.
Yeah.
You know, probably shouldn't do it, but I do.
Okay,
Don't pay as much
I
attention.
wish all you traders, I hope you had a profitable week. Hope you have a fun and safe weekend. Remember, it's not what you trade, it's how you trade it. So drain the banks. This is the Rumple One, over and out.